This week is a big week in the markets because we have the final FOMC meeting of 2025. As you guys know, there's going to be a ton of volatility in the markets. So we're going to let you guys know what to look out for come Wednesday. So if you are new to the channel, make sure you subscribe, hit the like button, and let's talk about what you need to know for this week. The crypto markets continue to be manipulated. It's actually insane watching Bitcoin's charts. If you look at what has transpired over the last little week, well, we have had some major dumps and major pumps on Bitcoin. We can see that starting last week, we went from, $92,000 all the way down to $83,000 to only come back to $94,000. All of this in the span of 3 days. And as we entered the weekend, we actually dropped into a new range. And on Sunday, we all know that Sunday liquidity is horrible. Weekend liquidity is horrible. Bitcoin went from, roughly $87,000 to a high of $91,000, right back down to $89,000. And right now we're sitting around $90,700. But just to let you guys know, this is typically what happens on weekends. We are usually in, a bunch of liquidation events. People, longing down here, people shorting up here, and the markets are just withdrawing, and the markets are just liquidating people on either side here as there is very low liquidity and it's easier to move the price of Bitcoin. So that's what happened over the last few days. Now, if we take a look at what's happening this week and why this is an important week, well, taking a look at macroeconomics, because of course, what happens in the macro does impact crypto. We need to pay attention to that. And if you look at the calendar for the upcoming week, on Monday, we have essentially nothing. On Tuesday, we have jobs opening. And the reason this jobs opening is actually quite interesting for this week, we know that the labor market is actually doing horrible in the United States. And the reason for that is because over the last few months, we've continued to get revisions on new jobs being implemented into the labor markets. Layoffs are surging, and right now, US layoffs are actually predicted to surpass 2008 recession. And as you guys know, in 2008, it was the economic crash, a massive burden on the labor markets. The economy was doing horrible, and we have predictions right now that the labor markets in terms of layoffs is going to surpass what we saw during the 2008 crash. If we take a look at this graph here, we can see that US companies announced 153,000 job cuts in October of 2025. That is nearly tripling what we had in 2024. It was the worst October in 22 years. Year to date, layoffs have reached almost 1.1 million, up 65% year over year, nearing the great financial crisis levels of 2008. And taking a closer look at this chart, well, remember the great financial crisis. This is 2008, that orange-ish line. You have 2020 with the global pandemic skyrocketing. But we are slowly but surely getting to that point where the labor market is absolutely horrible. And the reason this is important for crypto and what happens next with the economy is because the Fed has a mandate to balance what happens in the labor market and what happens with the economy and inflation. So they need to balance both of these. And right now, inflation has been somewhat balanced. It's staying relatively flat, but the US labor market is hurting and hurting quite bad. So on Tuesday, when we get that jobs report, it is going to be interesting to see how it shapes up. And as we all know, on Wednesday, we are going to have the FOMC meeting where the Fed is right now likely to cut interest rates. If we take a look at the current predictions, we have about 88% of the Fed cutting 0.25 points, and we have, about 11 or 12% that they won't do anything. So obviously the markets are currently pricing in that rate cut. Now, if you take a look at what we've seen in the history of Bitcoin's chart when the Fed has cut interest rates. I wanted to just show you guys a few things because it does help the market. Why does it help the market? Because it brings better liquidity conditions for people. And as the Fed continues to lower rates, which they are planning to do in 2026, it is going to just continue bringing better liquidity conditions to the financial markets, including crypto. So if we take a look at Bitcoin's chart, let's zoom out here and let's overlay what we have as the US interest rates. And as we can see, it's been very interesting to see the relationship of Bitcoin's price and what the Fed has done in terms of interest rates. If we go back to August 2024, which is actually the first time the Fed cut rates after it being at 5.5% for a very long time, this marked a very crucial point in Bitcoin's price because we had about 6 months of consolidation. The Fed decides to cut interest rates, and then boom, again in October of 2024, almost back-to-back interest rate cuts, and the price of Bitcoin surged quite rapidly from roughly $56,000 all the way to new highs of $106,000. Now, of course, there's a lot more than just the Fed cutting interest rates that is going to impact the price of Bitcoin, but that is one thing that helps the price of Bitcoin go up and helps markets, equities, risk on assets continue to go up. So as we can see, there has been a bit of a divergence over the last few interest rate cuts. We have seen the last 2 interest rate cuts, one in September as well as one in October, not have that much of an impact on the markets. We've seen more of a broader correction in crypto during that time. But again, if we zoom back to the previous bull markets, you can clearly see that 2021, very different in terms of interest rates. We practically had none during the COVID-19 pandemic. QE was in massive effect as well. But if we zoom in onto 2017's bull market, well, as we can see, you have very low interest rates of roughly 1.5%. rather than where we are right now of 4%. So of course, this is going to continue being beneficial into 2026. And if we take a look at right now, the probabilities of the Fed continuing to cut interest rates into 2026, this is what I'm looking at, every other FOMC meeting. Right now, we have the cut anticipated this week, and then another cut anticipated in April, and further cuts into the rest of 2026. There's also a lot of things happening with the Fed chair because we are going to have a new Fed chair in May of 2026, which could change the entire trajectory of the markets. So that is something else to continue monitoring. So with all of that said, this week is going to be interesting to see how the markets react to the FOMC meeting. Again, if there isn't a cut or if there's a hole, I think it's going to be pure panic, but I don't even think we need to worry about that because right now, 90% chances of a cut. I do think the markets are going to like that. Whether or not a bullish move is going to be sustained after that cut, I think is yet to be seen, but I do think the more important move is really when we start seeing the Fed balance sheets start going up because, as we know, QT ended just earlier this month. So liquidity conditions are going to get better. And if you look at Bitcoin, in my opinion, I've continued to believe that Bitcoin is going to go back to that 50-week moving average. If we take a look at, how much Bitcoin needs to go up for that to happen, it's about 12%. The reason I point this out is because in 2021, during the last bull market, when we had that flush below the 50-week moving average, we came back about 3 months after dropping the 50-week moving average. We came back to retest it. And again, if that were to happen similarly in 2025, well, we dropped below the 50-week moving average in early November. 3 months from then would be right around the beginning of February. And that would also make sense in terms of liquidity conditions being better. So I am expecting Bitcoin to eventually get to that 50-week moving average. And after that, I do think it's going to be the test of whether or not Bitcoin's price wants to go back and, go back lower or go back higher with better liquidity conditions and start heading higher into 2026 or whenever that test comes. So that's what I'm thinking for Bitcoin. If you look at altcoins right now, they are continuing to bleed against Bitcoin. And last time they really stopped bleeding against Bitcoin was when the Fed balance sheet started to go up. We know that QT ended just last week, but the Fed balance sheet hasn't started going up just yet, as there are still treasury assets, maturing and being sold. But that is eventually going to end likely in the start of 2026, as the assets of, November expire in December. And ultimately speaking, we could potentially see the bottom of your alts versus Bitcoin in early 2026, if that is the case, which would respect what we saw in 2019. But again, it all depends on the price of Bitcoin. So with that said, this week, keep your eyes peeled on that meeting. Keep your eyes peeled on what Jerome Powell wants to say about the future. We are also going to get projections with what 2026 looks like. So hopefully he's a little bit more dovish than bearish. And that is going to probably go a long way with QT finally done and the Fed balance sheet slowly but surely going up. So I hope you guys enjoyed the update. Keep your eyes peeled this week, and if you are new to the channel, make sure you subscribe. Check the first link out in the description below if you want to see what I'm doing in the crypto space, what I'm buying, what I'm selling, the market research that we do, the private opportunities that we have on different projects. All of that is in the Discord, and make sure you subscribe, hit the like button, and I'll catch you guys in my next video. Peace.